Hello and welcome back to the ROI channel, the channel that's obsessed with all things to do with return on investment. Got another stock review today for part of our healthcare allocation to the portfolio, and that is ABBVIE, big pharma, third biggest, I believe, behind Pfizer's number 2. So let's get straight into it. If you haven't liked or subscribed to the YouTube channel, I would greatly appreciate you doing so. And if you have any questions, by all means, pop them in the comment section and I'll do my best to get to them. Our investment formula that we use when analyzing businesses for the portfolio is as follows. We're looking for those with low debt, high margin of safety, sales growth, strong margins, free cash flow growth, so how much is left to be distributed to the owners or to reinvest in growth, and ideally share buybacks. So if we get those, we are starting to look much more closely at a given opportunity. Revenue for ABBVIE, everything was a beat on this company. Literally all the numbers were higher than estimated, the analyst decision, and the share price goes down. Okay. That's the welcome to the stock market. The fears around this company were, I believe, that the FDA has put a mandate out on their Humira drug, which is one that they use for eczema, saying that they had to put some warnings on there for certain types of people. They can experience some side effects such as blood clotting, from what I understand. But here's the thing, all the competitors have to do that as well. So Pfizer has to do that now. So I'm not sure why ABBVIE really copped it, but anyway, it could be an opportunity for us to add to our position. But obviously it can be a little frustrating when you're looking through and literally all the analyst expectations are being beaten and the share price is going south rather than north. Anyway, revenue 56 billion, okay, historically grown at over 10% compounded per year, so very, very healthy there. EBITDA 29 billion, margins growing there, so EBITDA growing faster than top line revenues, which means they're keeping more of their profit or more of their sales as profit as they grow. Market cap 190.3 billion. Enterprise value 263.9, and share price today it has dropped down to 107.73 US dollars. 1.76 billion shares on issue. Last year they had a little bit of a share reduction. It worked out to be about 0.5% in terms of their float at the time, and they pay a very healthy dividend, 4.7% dividend for a high quality source of earnings. It is fantastic, as is return on capital of 19%, which is pretty good. A little more laden with debt, so still well within our 3 times net debt to EBITDA comfort level, but a little more than, for example, Bristol Myers, which I did a video on just the other day. If we look at the performance, the price chart over the last 365 days in percentage terms, you'll see things were going really well. It was looking at a 20% year-on-year gain, and then it just fell off a cliff after that FDA announcement, which is quite frustrating because it's been holding back the gains of some of the portfolio. But I think if we put this into a greater context, I don't see the FDA's announcement as a major headwind. What is a little bit of a headwind is the concentration of the Humira drug sales. So let's have a look at that. Here we are. So Humira drug is 43% of the sales now. That's coming under pressure. You have some European competitors that are basically ripping off the drug, and so the US is a mess when it comes to healthcare. Sorry guys, but everything costs 6 or 7 times more than it should. So there's no way that you can compete in that regard. So that will be something to keep an eye on. So there's a little bit of concentration risk in terms of the revenue. However, they do have a wide range of drugs available. So they treat lots of different things. Reading an extract from the CEO, he's wanting to put into, or more efforts into, monoclonal antibody treatment of Alzheimer's disease, which is obviously going to increase with our growing segment of the population that is in the over 60s and over 65s, which is obviously where Alzheimer's prevalency really goes through the roof. And so if they can start to do good work and come up with treatments for that, that will be obviously a huge plus. But obviously there's a high degree of uncertainty with any of these sort of pharma companies when they're looking to trial new drugs. The takeover of Allergan, I think I've said that correctly, is already completed, so they went through that takeover last year. That should be accretive to revenues. So hopefully, as long as they can manage that combination well, that should be a source for growth into the future. And as I said, those last points are ones I've already mentioned with regards to the runway for growth in terms of Alzheimer's treatment and the Fed's, not the Fed, the FDA's mandate has resulted in this short-term unpopularity in the stock. Let's look to the end of 2022. These are the metrics for the free cash flow, the EBITDA, and the earnings on a per share basis that are expected. Oop, jumped ahead there. And these are the industry median multiples. Now, like Bristol Myers, the company, for some reason, is being undervalued compared to its peers. Bristol Myers, I definitely don't know why that is. ABBVIE, I guess you could say there is that concentration risk, and they do have a slightly heavier debt load, but that's about all I could really say. The negative sentiment to me seems to be more about the FDA mandate, which is less of an issue from my perspective anyway, longer term. If you average these three up, we get an implied price of $151, and we're looking at a 40% upside from here. So obviously for a quality company with a great history, that's enticing for us as investors. Here we're looking at the 10-year performance, so using historic growth rates and industry median multiples for the EBITDA, free cash flow, and the earnings per share. And then we apply a probability weighting to each of those scenarios, a bear case, a base case, and a bull case. And we get an average intrinsic value here, $137.38 US. Okay, so shares are trading below that at the moment, and if they were to drop to 2/3 of that as a valuation, we would start to get excited to be a higher a conviction weighting in the portfolio, because we really believe that the long-term fundamental value of the company is there. It's a short-term sentiment that's led to this particular sell-off. If we move that out of the way, if we buy the shares today and we receive this in terms of expected EBITDA on a per share basis over the next 10 years and sell at a median multiple, so not an exorbitant multiple, but just the median multiple, we discount those flows back at the weighted average cost of capital for this particular company, and we've got just over 24% annualized return, which is sensational. Okay, absolutely sensational. And if we look at the cash flows, so same formula but for the cash flow, and we buy the shares at $107.77 today, this is what we're looking at: 17.81% annualized return, or IRR technically, when you're using the cost of capital for the company as our discount. So those are very healthy. They're going to beat the market in more years than not, in my opinion, if history is any sort of guide to go by. So we're holding, we currently hold a 2.7% of the assets under management in ABBVIE. If they were to get down to around that $90 mark, I would definitely look to add maybe another percentage point in terms of their weighting. So it's a quality company. It's got low enough debt, margin of safety, definite history of sales growth, strong margins, free cash flow growth, which will enable them to be able to pivot over time. If one particular drug doesn't work out, they may be able to buy another patent for another one, or continue to invest in R&D. They're already paying a great dividend, and what you may see is if growth opportunities start to stagnate, they could buy back a lot more of their shares, which would increase our ownership over the company. Thanks for watching. If you haven't already checked out the portfolio on eToro, please click on the link and you can add it to your watch list. Or if you're ready to rock and roll with a couple of $100 to copy, just hit the copy button and away you go. And if you're not following on YouTube, I would appreciate you doing that. Liking and subscribing helps get me motivated and to get more of these particular videos out there. Thanks for watching. Always do your due diligence. I'm not your financial advisor, and you have to take responsibility for your investments. Okay, so don't just listen to me or anyone else on the internet. Listen, get ideas, but at the end of the day, you've got to do your own due diligence. So make sure you don't neglect that. Be responsible. Thanks for watching, and if there's anything you want me to cover, leave it in the comment section. Otherwise, I'm going to leave it there and catch up with you in the next video.